I did want to start with that kind of old thinking around gold and the reason for owning it as an inflation hedge. And then therefore, that makes the case for the producers, right? Because you get to leverage up a little bit more on it. Is that disconnect? Is there still a connection between those two things, or is it over?
No, I think absolutely. When you look and see where we've come, and if you look back to the turn of the century and look at gold price is effectively the value of paper currency, and particularly the US dollar price of gold. And right now we see all the currencies weakening against the gold price and have been doing so for 2 decades now. So absolutely that connection is still intact.
Mark, really curious to see what signs of accelerating inflation that you see as well in terms of input price. If you think of some of the mining companies and then the impact on how you can pass that on to the consumer.
So, Tyler, as you know, we are a price taker. So we've got to sharpen our pencil as far as efficiencies and operating effectiveness goes. We can't pass on anything. It's what it is. The gold industry at the moment is in good shape because of the gold price. But again, it's a long-term game. The question mark over the gold industry is, are we investing enough in our own future as an industry to ensure that we are there for times of crises? And, there's no better example than if you look back in the global financial crisis and the performance of gold and how it should have supported the investment portfolios. Certainly this time around, it has. And I think there's a lot of wishful thinking in the market right now as we try and move out of this unprecedented crisis that we've managed since March last year. And everyone wants it to be better, and everyone believes it's going to just be transitory. But I think there's been a lot done and a lot of money printed, and there's been a lot of damage across the global economy, which still has to materialize.
The story, of course, for your industry, one you know very well, is that the easy to mine gold was mined a long time ago. Your costs have been accelerating, and there's signs that we will see higher costs continuing for you. What is as you say, you're sharpening your pencil. What's the best way to get more efficient, Mark? And where does M&A fit into that for you? What are the efficiencies you can find through a transaction, and how much of it is simply going to be straight old-fashioned cost cutting and operational, efficiency internally?
So efficiency is important, and our move to be more ESG cognizant is important. And with that, for the first time, the industry is really focused on technology, and those all help. But there's nothing better than the quality of one's assets, Amanda. The better your grade, the lower your cost per ounce. You might have unit costs higher per ton, but the cost per ounce is driven by the quality of the ore you mine.